Hello and welcome to the live trading hour, which is brought to you by the live trade room. What we'll be looking to do during the session as we approach the US Open, the cash open, where we'll have an influx of capital into these markets. We'll have a look through your foreign exchange markets, your major markets, of course, your commodities like gold and oil, and also global indices like the S&P, FTSE, Nikkei and DAX and things like that. So we've got a multi-asset class view, and we want to try and position ourselves, with a high degree of, I suppose, understanding in terms of what's going on, what direction we're looking to trade these markets, and hopefully we'll sort of help you with the process along the way. And if we get any opportunities during this broadcast, we'll be getting into those live, and all our trades are with live capital. Okay, so please see our risk warning currently up on screen. And of course, always be aware of the risks involved in trading the financial markets. Okay, so let's begin with a review of some market moving news, and we'll very quickly be able to identify where the opportunities lie. There is a couple of question marks over some of the fundamental news developments in these markets, and what we're talking about, of course, is the fact that we get these data points. So we're clearly getting significantly more inflation than the Fed have anticipated, even though they're trying to calm the markets to a certain degree. And the reality is, it's actually working. It's working very, very nicely. Fed Chair Jerome Powell was He had to testify yesterday, and he was grilled again on the whole inflation story. And effectively now the question marks are coming, is that what use is Fed policy actually serving right now? And it is an interesting question, because the Fed are spending 120 billion per calendar month through their bond buying program. And we're at a stage of, I suppose, as we come out of the COVID situation, there is real sort of doubt in terms of, spending such large amounts. Is that really necessary right now when growth is feeding back into the system? But we've got this very strange dynamic going on in with the bond markets. So we're seeing bond yields continuing to lower, and the net result of that is that we're likely to see an uptick in the stock markets as well. So will the bond markets and the yield from your longer term bond markets, will they be lower for longer? Are these on the way down, back down to the 1% level, with real yields in negative territory? What it does is it tends to push capital towards your stock markets, which is what we're seeing in terms of let me take that back. With the equity markets continuing to make further highs literally at every possible opportunity. So today, really, the only bit of news we have is retail sales figures, but we do really question, how much validity do these news events have? The markets kind of brush them aside and almost carry on as normal. A few years ago, they'd be reacting with markets would constantly be looking to reposition themselves. Not so much recently, so we would like a market that reacts to these news events in a certainly like they used to, but they're a bit non-responsive sometimes when it comes to these news events. So we've got to take them with a little pinch of salt, really, these ones. So we've got retail sales coming out in about half an hour, and there will be a consumer confidence figure. We're expecting, this is what's been happening to consumer confidence in the US now over the last year. And as you can see, the trend is very much higher. And we're expecting an 86.5. So in June, we saw 86.4. So we're expecting just a new high almost with consumer confidence. Okay, we've had the BOJ as well earlier this morning, kept rates very much in line with expectations at that 0.1. So with this information in mind, let's go in and we'll see what opportunities we have for you today. So we'll bring up our trade plan. So what we have on screen, we've identified potentially some dollar strength, and we're seeing the euro dollar just begin to kind of break out of this little sideways moving pattern, and looking to extend further to the downside again. So what we'll do is we'll have a quick look at these markets on the daily time frame just to see where we're at. We're not quite at these lows just yet, but we will do probably pretty soon. Okay, so we'll just do a little bit of analysis across these markets. What we're looking for is some continuation to the downside for the euro dollar. So we're beginning to see that move kick in. I'm just going to bring this little level down to below today's daily low. So we're kind of at that level now, below the 11800 level. Will we see further downside? We'll certainly wait and see. So how is the dollar positioned against other currencies? Well, the answer is we're not seeing much gains to the upside or to the downside really against the pound. We're beginning to see this market just tick higher, just above yesterday's daily high. So a bit of dollar strength against the yen. Also, we're close to breaking higher as well in the dollar Swiss, the dollar CAD. Okay, it's just a little bit on the slow side, so it's just stalling a little bit. I don't really know why, but okay. So yesterday we had a decent move higher. We've got a very important 200 period moving average just above it, so that's likely to provide some significant resistance in this market. However, above that level, or a pullback to that level, would give us a good strong buying position if prices do squeeze higher. So it's just we're in a precarious position just right now regarding the dollar CAD. The Aussie dollar, we have this little handle in here. We do like this market further to the downside, so we'll see if we do eventually get that breakout trade that we're looking for. But it's important to just try to wait for this market to break below this low if we possibly can. But there might be a couple of decent opportunities in the euro dollar to the downside, maybe the Aussie dollar to the downside. The New Zealand is looking a little bit positive against the dollar. We've got more indecision in the euro pound, a bit of a pullback going on currently in the pound yen and the euro yen. So we wanted to see if these markets could flush lower. They're certainly not doing so just yet. Just regarding gold, just come off the highs. With this sort of lowering yield curve, we've got a situation where there's definitely more of an appetite for more risk. And we're also looking at the gold market and seeing is there a bit of value there, but we're seeing a little bit of dollar strength today, so that's likely to put the gold market under a little bit of pressure, which is kind of what we're seeing. So this little rollover does make a little bit of sense. We have these double bottoms just sitting in here for crude oil. So will we find a little bit of upside again? We're probably going to make a decision on Monday on this one, because whether it falls lower or whether it strengthens a little bit, today now is probably not the best timing wise to get into this trade. And this is where I suppose the potential lies. Yesterday we were looking to see, could these markets break below the 43.50 and could they stay lower? And the answer is no. We're not able to do that. So we're seeing some further strength across the board now. Yesterday was risk off largely. Today now we're back to risk on. And it is supported, whether we like it or not, and whether it makes sense to us, which it doesn't. These markets are still very, very supportive, are very much supported, which is really why we're seeing new highs in these markets. So with the Nasdaq, we didn't really see the move kick in like we would anticipate, and I think we were looking more so at the S&P below that 43.50 level. The FTSE market is just finding a little bit of support in here, so we're really a little bit range bound in most of these markets, to be fair. The DAX is just holding around yesterday's lows. So we've got an incoherent picture. We're not looking across the board and thinking, okay, right, well, now everything's lining up quite nicely. We're going to look to, and the fact that these stock markets are pushing higher, it doesn't really support our dollar strength trade. In fact, it's a counterintuitive move. So if these markets pushing higher, we'd expect the dollar to weaken, but we're not really seeing that either. Bitcoin, further pressure to the downside. That would be certainly our bias in the short term. But we've got horrible price action now for the last month. So do bear that in mind. Okay, so what we're left with, just to do a quick review, and what we'll do is we'll put our trading plan up on screen as usual. So we do like the euro dollar to the downside, below the daily low, which is kind of where prices are at right now. The pound, nothing's really going on. We'll just sidestep the dollar yen just for now. I think there's a case to suggest a bit of a move in the dollar Swiss to the upside. It's in a slightly better position. The dollar CAD, we've got some strong resistance up at these highs. However, we do like the Aussie dollar. So there are dollar pairs, and they're quite close. The euro, the dollar Swiss, and the Aussie dollar to the downside. Elsewhere, nothing in the euro pound or the yen pairs. Nothing really in gold and crude oil for today. That very well is likely to change on Monday, but nothing today. And we don't really like this up and down price action. Some people might look at this price and think there's value. We look at it and go, how are prices up at these levels? But they are, and they're continuing to push higher. So it depends if that's your trading view, if that's your opinion. What we've learned about trading markets over the years is we often look to interpret fundamental developments, understand sentiment, and then you want the technicals to follow suit. So just as a sort of a visual representation really on screen, I'll get up my pen and I'll just draw your attention to perhaps a couple of things. Yeah, here we go. So what we want to do is to monitor the fundamentals. People always ask, how much do we need to know? How much do we need to read? There's this paralysis analysis. So okay, so we've got the fundamentals. It's really kind of headline with a bit of context, and trying to get your head around kind of how, whether it's data points or whether it's central banks, whether it's treasury departments, whether it's politicians, whatever the case may be, you kind of want to get a bit of a handle for the fundamentals. Don't overanalyze. It's far too difficult because you got people in these markets and they've got different agendas, different views, and they're putting together those views accordingly, and it can do nothing but absolutely confuse you. Sentiment. So let's say there's some very poor fundamentals, poor jobs numbers, for example, and what you often find if you kind of look through the headlines, that there's a lot of sort of pessimism. There's a lot of sort of disdain for what's happening, and there's a bit of fear and anxiety in the markets, and you can almost get a little bit of a feel for that. And then what you want to do is to look at the charts and see, right, well, as a result of these events, are the correlating markets, are they technically moving in the same direction? If so, that gives us pretty much sort of no-brainer trading opportunities. So take the trade and look to get into those. And obviously, if it's the dollar, for example, you'd be looking to sell the dollar. But what we're kind of seeing at the moment is we're seeing we're seeing situations like so we're seeing situations like very poor fundamentals or very negative fundamentals. sentiment is a bit all over the place, and we see the technicals pushing higher. And under situations like this, unfortunately, what we're left with is just a big question mark. And it's not like that just for us. It's like that for traders generally. Unless you're kind of a scalper or you're trading very specific and very small time frames, but you're competing against lots of trading systems and things like that. So there's just a lack of coherency in these markets, and the correlations are not stacking up as we would ordinarily like them. And then that just creates a bit of a problem. But that's why one of our pillars when we trade is patience. It is having the patience necessary to wait for the opportunities that are better quality trading opportunities. So can we look for a buy trade in the S&P? Not really. It's a bit counterintuitive, although prices are pushing higher. So look, we'll stick with the euro dollar. I'll tidy this up a little bit. Oh no, that's fine. So we can just look for. So yesterday we were looking for the pullback trade to the downside. Prices pushed to the upside and then started to roll back lower. And now we're looking for the continuation trade to the downside. So we can just so this is a high probability trade. So it's below yesterday's low, which is the 1763. So that's our trade plan for the euro dollar. Let's also have a look at the dollar Swiss. So we're looking for this little breakout trade. It's actually above the 9200. So the breakout to the downside for the euro dollar is actually below the 1800 basically. The dollar Swiss above the 9200. So we'll just amend this bit of information here. So now this trade is a high probability breakout. It's a high probability breakout trade, however it be, but now above the 9200. So that's nice and clean. These are both very similar trades, so it might be a case of just know that they're correlated, and so if one breaks forward, the other one's likely to follow suit. So the other market we were looking at was the Aussie dollar. We just put this in here, and then I think it's probably still just worth looking at the S&P 500. So here is the low. We're looking for instead of a pullback sell trade, we're now looking at a breakout sell trade below the 74.10. So we're now much lower, 74.10. So now we're looking for a breakout. So we like to categorize the trade so we understand what we're looking to see. So this is a high probability sell trade below 74.10, and we'll put that in there. Okay, and really just monitoring yesterday, as you can see on screen, we were looking for a breakout sell trade below the 43.50. We got a sort of a brief move lower It really failed to stick to any great extent. I'm going to delete just a few of these because we don't need to have them on the screen. The purple lines are more like intraday and daily highs and daily lows and things like that. So you don't need too many of them, and as we progress through the chart, we're obviously adding more and more. We try to utilize the ones on screen so we don't put too many up, but we can easily take them away. So we're just going to monitor, oh, excuse me, let's take yesterday's low. We'll zoom in as high as we can. So we can just see that there's this risk on market condition in the US indice markets, and that shouldn't be good news for the dollar to the downside, but the news very well, the opportunities may effectively reveal themselves. Okay, apologies for that. So we can see as the S&P is strengthening, you can see there's a bit of weakness creeping into the dollar. So it just might just quickly see what happens with this event on a smaller time frame. So it's a nice little flush to the downside, a little bit of a pullback, that's all that is. We got the initial close, but we didn't get the follow through to the downside. So until that happens, are we comfortable getting in on a pullback at these levels? Probably not. There's an awful lot of consolidation there, so it just might be a part of consolidation as well. We keep an eye on the daily time frame overall, but it's a pullback to the downside. So we'll see if anything changes there. The dollar Swiss is probably a pullback from the highs. Okay, so this is a little bit more sort of triple top area. So if we get a close, a close above this level, then we would expect further upside, and you've got nice concise stop loss opportunities below these levels. So it might be a case of like a 20 or maybe 30 point stop loss. You could even go down as far as the 69 level. So if you wanted to give yourself a little bit more room, which is really what we're advocates of in these markets. You know, pre-COVID, we'd be taking kind of trades with kind of a 30 pips stop loss, something in the region of that. Now we're looking at 50, 60 points or pips stop losses. So almost double the stop losses that we would normally take. And it's just really taking into account the kind of erratic nature and the volatility of these markets. Not always that coherent. You know, things like patience and consistency and discipline with your capital are all too very important. Okay, so that's the dollar Swiss, just pulling back off these highs. But if we get a break through that 9200, there's a decent high probability buy trade in there for you. So that's that. Sorry, let's apply that logic then to what's going on in the Aussie dollar. So we've got this low down here. So breaking, if this market was able to break lower, and we're going to get closed below the 47.10, we're only sort of 10 pips away really from that. Then we've got a stop loss here at 74.43, and we'd expect further downside certainly on the daily time frame. So potentially 2 or 3 decent moves. We obviously need the price action in order to be able to act. We've got a news event out now in a minute, so I've put on our Squawk service, so you'll be able to access it, the information as it comes. We get a live update. So these are our trades. These are marginally the better opportunities out of all of them, but there's the 74.10, and this is our high probability breakout trade to the downside for the Aussie dollar. We currently have little pullbacks. So what we're looking for is prices to actually extend to the downside or extend to the upside.
3 minutes away now to the release of the US retail sales for June. Again, the advance month-to-month reading minus 0.3% expected, with ex-auto month-to-month 0.4% and ex-auto and gas reading 0.5% expected. Additionally, with the Canadian wholesale trade sales numbers for May with month-to-month 1.1% expected, and the Canadian international security transactions.
Okay. Okay, so these are the moves that we're looking for. I suppose we could put a mini question mark over this as to whether we're going to make new highs, whether it's going to roll lower. We would like it to roll lower, but the markets will always do what they want to do. So we're going to just monitor it really more than anything. But we'll get this news event out now in just a couple of seconds. Well, no, it's probably 2 minutes left, really, minute and a half maybe. So what are we looking for? If I just take this off, we've got retail sales figures at 1:30 today, obviously the 16th of July. So we're expecting positive core retail sales, negative retail sales. You see this event might not have much impact on these markets at all. So we'll they've pretty much ignored very significant CPI and PPI news events this week, which is very surprising because that's very much directly linked to the Fed's monetary policy in terms of tapering their bond buying or increasing interest rates. So they're very important towards that, and the markets reacted in a very counterintuitive manner. So these retail sales figures might not have any impact. But what we're looking for is 0.4 and a minus 0.4, so we can just keep that in the forefront of our minds as this news comes out now in just a second. And then what we'll do is we'll probably wrap it up for the week. We'll be moving to our we've got another trading session to go to, so we'll be moving over to that. But we'll be back again Monday, of course, at 12:30. Well,
10 seconds.
We look to go live around 12:30 every day, so if you can join us for that, please do give us a thumbs up if you can. Subscribe to a channel, we'll notify you when we go live.
0.6% month-on-month for retail sales, with X Auto at 1.3%, gas and autos at 1.1%, while retail control at 1.1%, while the Canadian wholesale trade sales at 0.5%, and Canadian security transactions at buying of 20.79 billion. So you interpret that's the US retail sales month-on-month rating coming in at 0.6%, with a prior vision of minus 1.7%. That was a beat on the minus 0.3% expected. Looking to the X Autos month-to-month reading 1.3% with a power vision of minus 0.9%. X Autos and gas at 1.1% with a power vision of minus 1.0%. Retail control at 1.1%, power vision of minus 1.4%. Looking at Canada again, as the wholesale trade sales month-to-month at 0.5%, was below the 1.1% expected. While the Canadian international security transactions a buying of 28.79 billion Canadian dollars worth.
Okay, so we've got much better than expected retail sales figures, which is not really a surprise. What was a surprise is how low and how negative these retail sales figures were expected. So are we surprised to have an uptick in retail sales? Probably not, as this COVID, as economies open up.
In the UK, as England's R number estimated at 1.2 to 1.4, as versus the prior estimate of 1.2 to 1.5, as a daily case growth rate estimated at 4% to 7 versus prior of 3 to 7%.
So this Delta variant is really getting to grips with these markets, and what it's creating is a little bit of kind of fear and anxieties. So when you see markets like that, they either react with extreme volatility in a particular direction, or they end up sort of drifting in this sideways pattern, and that's what it looks like so far. So really we're looking for the euro dollar to the downside. Hopefully we'll get further continuation, and the dollar Swiss to the upside. So we're seeing a little bit of a move in favor of the dollar. It should be a dollar strength.
Some power visions coming through to the Canadian data as well. So wholesale trade sales revised higher at 0.6%, and the Canadian security transactions was a power vision buying of 9.9 billion.
So we're beginning to see some dollar strength begin to creep in, and in the Aussie dollar, so we can get our trading positions ready. We'll have some easy to identify. You see the S&P is still sort of maintaining a pretty stubborn stance to the upside. Sorry, Sorry, I put the wrong number in here, didn't I? I think it's actually the 1796. So 1796. Sorry about that, I put the wrong number in. But we all know it's this level down here. That's the daily low, and see if prices, because really what we want to do is to try and get into the routine of looking to sell below daily lows and looking to potentially buy above them. Same is true to a daily high. We'd look to buy above and potentially sell below, depending on the price action. So you can see that we had a little bit of an impulsive move, and then it's kind of backed off completely. Same with the Aussie dollar. So we might need to be patient. We'll probably give these markets another hour or two. If we're not really if we're not making any headway, we'll probably pack up for the week. So we're not going to be desperate to be getting into trades this afternoon. So we'll see. So we've had a bit of an up and down type of week. It's been difficult to try and get hold of something. Our bias is to the downside, but we're not really getting much follow through. So therein lies some of the difficulties, I suppose, for our style, the way that we trade these markets, which I suppose is kind of from a coherent position. We want to have a certain confidence in our decision making, and sometimes we don't get the market conditions that allow us to do that. So so on that note, guys, we'll pack it up there if that's okay, and we'll be back again all next week from 12:30. So from everyone here at the Live Trade Room, take care, and we shall speak to you very soon. Bye for now.